Every guest on this show has had to answer the same question before putting an AI agent into production. How accurate is accurate enough? Today's guest put a number on it. Jeremiah Garza is COO of Longhorn Investments, a private lender doing non QM, DSCR, and fix and flip loans. This is our first conversation in private lending, and the documents on his side are a different animal from anything we have covered so far. Single loan packages with hundreds of pages, and behind every deal is a separate set of underwriting guidelines from a separate capital partner. You'll also hear from Pedram Gobadi on our team, who built the agents Jeremiah is describing. He walks through where his team was before any of this and the piece of the process that actually hurt. He explains the accuracy bar he set at 98% and shares his experience with general purpose AI tools. And he gives you the before and after on the SCR underwriting 4 to 6 hours of manual review down to about 45 minutes. Hello, Jeremiah, and welcome to our podcast. I wanted to sort of start with a quick sort of introduction on your end. Tell us a little bit about Longhorn. What are the operations? And maybe we can focus after that on some of the day-to-day things that you do for some of our audiences that are not necessarily aware of your industry.
Absolutely. So my name is Jeremiah Garza. I'm the Chief Operating Officer for Longhorn Investments. We're a Dallas-based RTL lender. RTL is your residential transition loans, also known as fix and flip. So real estate investors, we've all heard of over the years, We Buy Ugly Houses, right? I think they were kind of one of the original kind of fix and flip organizations. It started spreading in the US. And as that kind of market spread, and there was a lot of other brands like them today and franchises out there who do the renovation of homes that have been out there for 50 plus years, that haven't really been brought up to date, right? So it's really the act of taking a home, upgrading it to the current specs and expectations of a buyer, and then turning around and selling it. And so, Longhorn started in 2008 by Michael Hoffman, our CEO and founder. And he started originally doing what's called deed of trust lending, which meant he was finding individual investors and pairing them with borrowers. And then he was facilitating that. He is an attorney by trade, so he was drafting documents and creating liens and so on and so forth. In about 2010, he started scaling a little bit. 2014 is really where the fund started. So we have a fund, 5060 registered security, that provides the capital stack for the debt instruments we create. So we are creating mortgages, deeds of trust across 11 states. We provide up to 100% loan to cost to real estate investors who are buying properties with the intention of renovating them, where there is some equity that is recaptured by that renovation, or investors who are wanting to create rental portfolios, right? They want the passive income of a tenant. And now with DSCR lending, which is your debt service coverage ratio loan programs that are out there, they really qualify off of the home and not an individual's credit. So it's the cash flow that is what's used to underwrite those transactions. That really has led to a whole new breed of real estate investors who are now what we call our buy and hold investors, which are not fixing and flipping, but they're buying, renovating, and then they're keeping that asset in their rental portfolio. Right. So Longhorn has about 1,700 of those loans in our portfolio today, just over 400 million actively in servicing. And we currently originate about 150, 40-ish million a month in new origination volume across the 11 states we operate in.
Those are very impressive stats. How does that volume changing? How is that changing since 2014? Do you see a change in the markets?
The market has changed significantly, right? We went from a time where interest rate Fed funds were at zero
Mhm.
after the mortgage meltdown, 2007, 2008, and then that got exacerbated, and the low interest rate environment spread through COVID, right? Where the government intentionally kept those rates low to continue encouraging business and to keep markets moving.
Right.
Um, 2 years ago, we saw the change,
Right.
right? Fed decided that they needed to start raising rates. And as we saw interest rates go up, it certainly impacted our margins and our borrowers' margins as they were evaluating deals. Cost of funds increased, and certainly deals became harder to pencil. So whereas an investor 3, 4 years ago could get into a deal that was a bad deal, but they could still make it work because there was so much spread because the cost of funds was so low.
Right.
As the cost of funds, that interest rate has gone up, the spreads are smaller, and you have to be better at penciling those deals, at underwriting them, at understanding the economics, the demographics of the market that you're in to make sure that that deal is going to work. Right. Today, our average loan goes for about 7.5 months. 3 years ago, the average loan was 4.5 months. So it's taking investors longer. And what does that 3 extra months mean? It's carry cost, right? You
Right.
have a monthly mortgage payment you have to make. You have your taxes for the year divided by 12. There's a monthly tax allocation in each month you're taking on, your insurance cost, all of those things. The longer you hold, right, the more cost that you're absorbing and the less profit that you make on your
Yeah.
exit.
That makes total sense. And from that, I think like the underwriting exercise is different than traditional mortgage when you are looking at individual's credit history and individual background there. Was that your personal background? Did you come from that sort of side of underwriting, or were you always in this space?
No, so I came from the traditional, started my career with a title insurance, one of the national title insurance underwriters, and spent 6 years with them. Then I moved into the lending world and moved into traditional mortgage and title, real estate being my background and what I've always focused on. Michael Hoffman was actually a client of mine. I had a title company that my wife and I were operating out of Fort Worth, and that's how him and I met. And when I decided to shut the title company down in 2010, Mike asked me to go to lunch, and that lunch led to him asking me to join his organization.
That's
And the rest
fantastic.
is history.
That's fantastic. Um, Let me ask you this: you've been in this space for a long time, and I love sort of the different answers I get from different people on this question. How has technology sort of evolved, let's say, over since 2010, 2014, and then like tell us a little about your perspective of this AI movement. That is slightly more recent. Having that background, having that exposure to that technology change. Tell me through your perspective of this change in technology as it relates to the industry.
Yeah, so, I've always felt like I was an early adopter when it came to technology, but I'll tell you, I wasn't with AI. I had a lot of trepidation when it came to AI. So when it came to new tech tools, new software, new gadgets, I've always been on board, ready to try. Um, AI scared me, frankly. A lot of the same fears that people have. And is it replacing our workforce? Is it
Mm.
replacing the people? Right? We are an organization that is built around people, both from the client side as well as from our team. And so, for anyone looking at adopting AI in an organization, I think buy-in is a big piece. Who are you going to be your champions, right? Who are the people that are going to help drive that? And so for us, first we started on a digital, transformation about 3 years ago.
Mhm.
Uh, Before AI was kind of out there, we were hearing about it. At that time, we said, we started looking at our data as an asset. Right at that point, we had done 10,000 plus loans. And we had fragmented systems, data was all over the place, and we were running Excel spreadsheets and pivot tables and doing some macros to kind of analyze that data and help us identify trends. Right? And those processes were extremely manual. Took 2 and 3 people sometimes. And so, as we started scaling, we said, okay, we need to find out how to do these things in a more cost-effective way. And so initially, we started offshoring. And so we still have, a great team out of El Salvador and the Philippines. Um, we have about a little over 110 on the team today. About 25 of those are on the offshore team who play pivotal roles in the organization today. We have some of the offshore members who've been with us for 5 years plus. Our average tenure in the Longhorn organization is 5 years plus. Uh, we have over 20% that have been with us for over a decade. So certainly our people are important to us.
Right.
And so understanding how to utilize AI, but also have the team understand our adoption or implementation of it is not to replace them,
Right.
right? It is
Yeah.
to make them be able to do more with less. And particularly in underwriting, which has been one of the most profound use cases for us when it came to Kalina, really making sure underwriting understands what AI has provided them is a whole team of researchers, right? They
Right.
have researchers who can do things in minutes versus hours. So 3 years ago, we started with moving to a data warehouse, start evaluating tools, business intelligence, looking at iPaaS solutions, and really building our tech stack. So that was
Right.
foundational for us, step one. And then moving to an ERP, right? Moving from 7 different fragmented systems that each were siloed from a data standpoint to one organized data structure that everything feeds back into that's reportable. And so we're still building
Right.
that. It's
Hmm.
an evolving process as it gets better and as AI is adopted in the data warehousing and data lake space as well. Certainly it is changing how quickly you're able to do those things.
Right.
But when we started, certainly it was a little bit more of a manual process in getting all that set up. So we've got a team there who manages the data side for us. And after that, we're in the financial industry, right? So we're dealing with NPI or PII, non-public information or private information of our clients' Social Security numbers, wage information, and information that our clients certainly do not want out. And we started looking at AI, and we hear about these AI agents that are learning off of the data, and so it gave us a lot of pause. And
Mm.
so initially, we turned all AI off. We blocked it completely and said it was not allowed in the organization. And I went out. I tend to be a little bit conservative in my approach. So we hired a national law firm to do some research for us on how to do it properly,
Right.
right? From a financial services standpoint, what should we do to implement AI in the organization? And they looked at, FCC, FTC, and kind of consumer protection laws and how they overlay on AI adoption, which those laws are changing right now. They're evolving, right? As we don't have anything federally that kind of governs. So you have some states who have put some sporadic things out there, Texas being one who adopted an AI legislation. And the law firm helped us draft some language that is in each of our loan agreements now that provides active opt-in by our borrowers, which
Right.
allows us to utilize AI both in underwriting examination as well as in servicing, in outbound calling, using AI agents to call and interact with our clients. So we added that language to our documents about a year ago.
Right.
And I wanted to make sure, I think I mentioned earlier, average life of loans about 7.5 months. So if we look at a year
Mm.
ago at this point, 80% of our portfolio of what's in servicing today has active opt-in consent, as part of what they agreed to when they agreed to do business with us.
Right.
And
It,
certainly we take, the steps necessary to protect their information in how we utilize AI,
mm,
in making sure that those AI agents are not learning off of any of the data that we are feeding to them, and then, trying to follow industry best practice as it relates to the deployment of AI.
yeah, that's a very good point. I mean, that was, I went through this sort of wave myself, and the security aspects of this initially a very valid concern, and I think that's why it's important to make sure, first of all, from a legal standpoint, you have the grounds to process data, but from the security standpoint, I think it's very important to have zero data retention policies with whoever it is that you're working with, because I think AI sort of initially started training on all of the world's public quote unquote data. And I think their next potential aim will be to train the new sort of generations of AIs on private data. And it's very important to protect that, because I could see that being used. That's a very interesting sort of journey that you've had there. Let me ask you about this. Like, when you first started to look at it, you mentioned a couple of things that you thought AI would be helpful with, and that is sort of understanding trends and patterns from your data. I know we work with you on loan processing and packaging and appraisal sort of processing. On that front, what were some of the things that initially you realize that, hey, this is a good application? How do you suggest other folks in different companies in your position to identify and prioritize use cases that are good candidates for AI?
And so the way we've approached it, and I, preach this to the team all the time, is we work from a problem first framework, right? So to bring on a tool or release anything without it solving a friction point or an actual problem in the organization, in my opinion, is a waste, right? So first, when we look at adopting anything, we say, what is the problem we're trying to solve? Right. And so, we can use underwriting as a good example. And, one of probably the biggest workflows today that we're leveraging Kalina for is underwriting of DSCR loans, and currently working through the RTL. And we'll have that up and running here, hopefully in the next few months as we fine tune the agent. But on the DSCR, it's really a set guide,
Mhm.
and there's guidelines that are strict, black and whites on approvals. And so, for us, that process was 4 to 5 hours of manual reviewing anywhere from 10 to 30 documents. You're looking at bank statements, you're looking at credit reports, appraisals, flood certificates, title commitments. The list goes on of the real estate related documents that we look at when we're dealing with a mortgage loan in the US. So as have an underwriter who's responsible for making the risk-based decision, that was a time-consuming process. Whereas when we met with Kalina originally, the problem statement was, we want to be able to underwrite files in under an hour, right? That was the goal when we started. We want to
Right.
take a process that is a 4 to 6 hour manual process down to a 45-minute. And one of the keys was, I didn't want AI to make the decision, right? Part of our success has been uh, we make the judgment calls regarding the loans we are going to do. We're a private lender, right? We have the ability to do the things that banks will not do, because we can spend the time evaluating the risk and make a judgment call.
Yeah.
That requires a human,
Mhm.
in my opinion. And so for our underwriters, it was using Kalina to do the research, the data extraction, to organize this data in a file, a layout that is convenient and easy for them to examine. Um, and today we call it an assisted underwrite. right? And it's about 45 minutes is what it takes our underwriter today to go through and underwrite a file and reviewing all those documents. So, the AI agent guides them in pointing out things, documents, irregularities it finds across all the documents that evaluates together as a set, as well as specific rules that are applied to each document as it relates to the guide for the loan program the borrower's applying for.
Yeah. Yeah, that is very interesting. So the thing that you are saying here, it really resonates with most of the people that I've spoken with. And this advice is coming up over and over again. That is, you start with the problem, you start with understanding the size of the problem, and then you have goals around what you want to get to, and then you pick the solution that fits, that solves that problem, um, the best. So, um, let me ask you this: I haven't been as involved with your like day to day agent building as Pedram has been. But tell me about that decision process. I recall you guys move pretty quickly in terms of seeing something and making a decision, which I don't think it's a pattern. I think it's an anti-pattern in the industry. I don't know if that's a pattern with Longhorn, but I'm curious to know your perspective in that decision making process from first learning about AI in general, but Kalena, and then making a decision. How did that work? How tell us about why it turned out to be faster than
I think
usual.
Kalina makes that easy, right? In kind of the way that you guys approached us. So I had talked to an executive of a software provider some time ago, and he had formerly been with Google on the AI side. And I asked him, how should I be approaching AI? I said,
Mm,
I'm worried because I'm getting calls from, random people all the time, and they say they're going to solve all of our AI problems, right? They are AI specialists and they are going to, across the organization, help us roll out AI. And he said to me, don't ever work with a single company that is a, full solution for AI. He
okay,
said, if you want to leverage AI, find partners who specialize in things that train agents and in some ways dumb the agents down a bit, right? In specializing them, you're untraining them for the vast general knowledge that they have, and you are giving them a more fine-tuned set of information to focus them so that they're faster, more efficient, and get more accurate results. And so that's really, resonated with me when he said it. And it was probably a month later that I got a call, and it was a random sales call from someone with Kalina, and I think it was one of the outbound callers who just set an appointment with my assistant. Because I'm one who I'll talk to anyone. So if someone calls and wants to set an appointment and pitch their wares, I'll take the time to hear them out. And so that's how it started. It's interesting. In Kalina's pitch was singular. It was focused, and it started with data extraction. Right, that was really what you guys led with when you called. Is we can help you extract data and give it back to you in a structured format. Um, and for me, that was appealing, right?
right,
We had our data warehouse in place now. We're dealing with primarily structured data. We're not in a data lake. So unstructured data, we're not there yet. We're, working on it. And as these tools continue to get better, I think, data lake is certainly in the future for us. But today we're dealing in structured, data warehouse in Snowflake. And so, that was interesting to me. And we had just launched DSCR. So we've been doing fix and flip bridge loans since 2008. We had not gotten into the debt service coverage ratio loan place because we balance sheet everything. We hold it, we own it, we control it, we make every decision on it. And that's short-term paper, right?
right.
It's less than a year. We know the window in which it's going to work. Once you start dealing with 30-year mortgages, then the exposure is longer. And so those notes really are intended to be sold, and they're sold in the secondary market. And you're not in control of that transaction the entire time. So we had shied away from it. Well, we decided in December that we were going to enter into the market. So January started setting up a new entity called DSCR Loan Funder.
Mm.
That is the company that currently serves the DSCR marketplace as a third-party originator, and providing services to brokers who originate DSCR loans for borrowers. And so with that, it was we had 6 sellers or buyers that we were selling to, and they each had different loan programs. And so I had 2 underwriters who were trying to learn 6 buyers guides all at the same time, which is challenging. And that was the first problem statement that I brought to Kalina. I think we had talked about appraisals when we did the test case, and Kalina said, we're going to give you an engineer. He's going to work with you in building the initial agents for you. And we were lucky, and we got paired with Pedram, who has been great for the team and still works with them today. And I've told them that's the only condition for us with Kalina is, Pedram knows our organization pretty intimately at this point, I feel like, and what we're doing. And him and I, meet separately as well to just talk more organizationally what we want to do and accomplish with Kalina in the tools. But he's meeting with the department managers and working on specific use cases with different managers independently. But Kalina came and said, we'll build these agents for you. We're going to give you 30 days to run the agents, test the agents. I think it was 30 days. I'm pretty sure it was. And at the end of that, then, you have a decision to make. We either go live, and they provide us fixed pricing up front, right? Here's the cost for it. And we signed a statement of work, essentially, that kicked off 30 days after the pilot. And so essentially there was a date in that agreement that we had a, I think, 10 o'clock a.m. meeting scheduled that was the go, no-go call after the pilot. And, certainly was hugely successful in my opinion. It wasn't perfect when we started. And we still, fine tune agents as we go and find things, because we are a private lender who deals in those non-standard transactions. You're going to see things in one particular loan that, you wouldn't see anywhere else. But the nice thing about it, in Kalina truly being a partner to us, is when we find those things, we reach out. We'll have, conversations with Pedram. We'll explain to him what the agent missed or what it found, or what it guided us incorrectly on. And then we work together to find a solution, right? For how do we modify the agent prompt so that the agent catches that, outlier in the future. And over time, I'm confident the agent's only going to get better. And, today, we feel like we can continue to scale our business at the pace we have been. Mike Hoffman, our founder, his goal is to get to $1 billion portfolio. We're just under half of that right now. And so we, have some work to do. And what we've told the team is we want to accomplish that with the team we have without adding significant headcount. And so that's really where, the leveraging AI has come in. We're not looking to replace people in our organization, but we're certainly looking to have them do more with less so we can grow without having to add the additional headcount.
A question that pops up in my head, and so far I've been working with a lot of clients, and so far Longhorn has been one of the best clients. It's been a pleasure working with your team. One thing that, I'm the person who helped you and your team put together a couple of these agents. One thing that stood out was how seamless it was, at least on your end, to incorporate these agents into existing processes that took years to form and years to, say, calcify, or maybe just kind of settle. I was really curious, how were you able to introduce the agents, not to disrupt the workflow, but as an helper, and get a lot of buy-ins? Because I'm working with a lot of team members on your team, and they're super open to it. And this is not typically the case. So would love to know how that happened.
I think a lot of that was the framework that the executive team had laid leading up to, the pilot that we did with Kalina in adopting AI and providing the team with AI tools. We gave the team ChatGPT, a year and a half ago, in an enterprise account with access to it, and that was kind of the first tool that we gave them to use. And then, probably 96 months ish, maybe not even that long before Kalina, we introduced them to super agents, and they're kind of purpose-built AI agents. And one of the things I did is I encouraged the team to name their agent, right? So give your agent a name, give it a personality. You're going to interact with it and have conversations with it, and it's still joke around the office with what some of the agents are called. But our team, the managers, as well as production level employees, have access to AI agents that they can converse with, and frankly, use for personal planning as well as business. Certainly, the goal is to leverage that to do more. But I think because we had already started that AI adoption early and introduced it to the team, never mandated it, never required it, right? And that was an important piece for us. And from the top down, showing them we were utilizing it, right? Me, Mike, the other executives in the organization, the managers, were not only utilizing it, but we were embracing it. And we were walking down the halls showing the team what we had built, what we had done, and in how much time it took us to do it. So I think the team has a really good grasp for what is possible with AI. They don't know how to do it all the time. And I think that's really where you've, helped them, is guiding them in how to accomplish it. I think they're getting better at prompting. They're learning to have the agent create their prompts for them versus trying creating their own prompts. But I think that has been kind of one of the challenges for them, is sometimes just feeling lost, right? Where do I begin? So I think your guidance is part of the reason why they have adopted so quickly. The appraisal agent, the most recent one that I think just finished what we call the observation period, and I think it's going live on Monday. Probably the most popular one right now, from the number of people who are loving the work the agent is doing. But it's a relatively simple, in my mind, probably one of the easier workflows that we're using in Kalina, because it's doing some basic data extraction. I think it's 5 or 6 guardrails that it's testing that are kind of pass fail. And it's reviewing comps, the adjustments on the comps, the distance of the comps from the subject property, the as-is value to the after repair value. It's confirming the appraiser's license is valid. So these were all, an appraisal review process that happened internally, that would take the team, 45 minutes to an hour to do. And today, the appraisal comes in, and they forward an email to the Kalina agent. It processes that, and within 15, 20 minutes max, it sends them back a report with all the data extracted that they need to look at. And then, as you and I talked about the agent, and I asked what was possible, we made that even better, right? In that we said, if these things fail, now send it to an underwriter. So now the processor doesn't even have to worry about routing it if it comes back and has any issues. Now the agent does it. Not only forwards it to the underwriter for review, but it copies the processor so that they know that it's in the underwriter's hands, and they're taking a look at it. So they have confidence in the workflow that we've built because it's keeping them informed. They know where the deal's at in the process. And it's doing some, manual administrative work that they didn't enjoy doing before. So, certainly I think that one we're hearing really, really positive things about. Teams excited for go live on Monday. And I don't think that was probably that was low hanging fruit in my mind, as far as some of the things we're accomplishing and some things we're looking to accomplish as we continue to roll out new workflows with the clean agents.
Now, and that's great to hear. This is, as an engineer, there's nothing better than hearing, hey, your agent is actually in production. People are using it on a regular basis. That's perfect. The other thing I wanted to ask is, I know that at least for this agent is pretty straightforward. You're hearing a lot of positive feedback, but typically what happens is some of the other organizations, the leadership kind of bring Copilot or ChatGPT or Claude to the kind of the bigger organization, and they just drop the tool and hope for the best without any measurements, or at least without any ways to measure the success of that tool. One of the things I wanted to ask, apart from obviously the verbal feedback that the team has, if there are teams that don't really talk about it, how would you measure that usage? How would you say, okay, this tool is actually better, or this tool isn't really working, I have to introduce another tool to the roster, or something is missing here, we need to look for better tools?
And I think when we talked early on, one of the keys for me was I was looking for a 98% accuracy rate or higher, right? Because of what we do, data points are instrumental in the decision-making processes that we have. So when we looked at Kalina and we were doing the pilot, that was probably the only thing I focused on, right? Is the extraction of the data right? And that was step one, and validating that what it was extracting was correct. Because the rest of it in my mind was easy. The rest of it was a set of business rules and a framework around how you handle the data that it's extracted. And that was one thing we had not been able to do successfully, not with Claude, not with ChatGPT, not with Base 44. We have used and tried a lot of tools during this AI, adoption in the organization. None of them really did data extraction well, right? They were 80% from an accuracy rating on a good day, especially when you're dealing with images that are not clean, right? It's different if you take a Word document, save it as a PDF, drop it into an agent, right? That is clean text. It's going to extract that. It's not going to have any problem. But when we get fax backs from a title company that are deskewed, that have speckles all over the page, they are much harder for AI agents to process and read, and that's what we're dealing with, right? We're dealing with consumers who are sending us scanned documents, sometimes documents they're taking pictures of on their phone and sending to us, and that's what we're feeding the agent today. So, I think the accuracy that Kalina has been probably one of the biggest pieces that caused a lot of trepidation, not just for me, but for other executives, managers, and production level employees, right? Their fear was, am I going to use this agent? It's just going to cause more work because now I'm going to have to go back and check to see if it did things right? Because who am I holding accountable? And I think that was an important piece with the appraisal agent. That might be one of the reasons the processing team loves it so much, is I told them that once we went into production, so as of Monday, processors get scorecards, right, on how they're doing in the processing of their files. And, the accuracy, there's a final step that is file review, where they review all the work of the processor, and that's in the underwriting department that reviews it and rates that processor's file. And so part of the appraisal agent is they are no longer responsible for any errors on the appraisal review, right? Because now the agent is doing it, it's automated. And so for them, they need the appraisal, they need data off the appraisal to process and size the loan, but now they don't have to worry about getting corrections to it, getting it approved, getting it validated. They can trust it and feel like, we're not going to hold them accountable for the AI agent making a mistake. And that's a big part, I think, for an organization. If you're rolling out AI, making sure you take the time to test it, decide how accurate you need it to be from day one.
Right.
If it's a process that requires 100% accuracy, define that up front.
Mm.
And then you have to give your team success in that, you're not going to hold them responsible for errors that the agent is making when you're offloading that to the agent. And if you're going to use an agent and still have a person review everything to check the agent's work, then you've defeated the value that the AI brings you.
Yeah.
Right. So there is going to be an acceptable margin of error in any workflow or process, right? Humans make errors. 98% is the accuracy rating we expected of our processors. So when I told you that's what I was looking for up front, that's because that's what we expect of a human, right? So I'm expecting the same when we are leveraging AI in any of those workflows.
Yeah. That's you talk about this so elegantly. It's awesome to listen to you, Jeremiah, on this. So it resonates really well with what we have been seeing as well. And that's why the Kalina's background initially was in model quality assessment. And then when we started looking at LLM's quality, we realized, oh, look, there is stuff that we can do that we can just deliver that to market as a solution instead of being the tooling behind improving the qualities. And that to this day remains one of the key factors in how people are making decisions because um, garbage in, garbage out. It's the oldest saying in any AI sort of training and model, and it's very important for your data that you want to make decisions on to be correct. The other thing that I kind of want to pull that thread on um, is um, is sort of the time it takes to gather this data. So the extraction piece, it is very important for the decision making process. And you're not the first one who's saying, hey, I still want someone to review this data to make a decision. And that's very important, critical part of this. But I would like AI to really facilitate that research and pulling that information out for that process of decision making. And maybe my question for you is, you kind of highlighted what the targets are, which is you want to 2x the throughput of your team without growing the team. What do you think the team can focus on with this quote unquote extra time now that they have besides data entry um, that is, part of or in service of that 2xing of the volume?
So we have positioned ourselves as a customer-centric organization from, our start. That has been one of the kind of the core principles in how we do business. We are a relationship first lender. And so, part of this is going to give our processors, our underwriters, our loan consultants, our finance team and our executives more time to manage those relationships, right? To be on the phone and talk to our borrowers. We still pick up the phone and call people every single day. We're not the guys who are going to sit there and do everything via email and text message, although we find, there's certainly a demographic and a user base that we have that prefers to communicate with us
That's
that
right.
way.
Yeah.
And so we're fully prepared to do that and have the tools available if that's how the consumer wants to interact with us. But we still, we know our borrowers. That's part of the reason we feel we've been successful. We're not a big broker shop. We are a retail shop, which means our loans, our borrowers work directly with us. 90% of the business that we do today is retail origination business. So, we're not having brokers bring us their relationships, we're establishing our own. And so that's a big part of it, and making sure our people have time to continue to nurture those relationships. 40% of the deals we do today are repeat deals with borrowers who are doing another deal with us, right? So they had a good
Right.
experience, have come back and are doing another real estate investment and are asking us to provide financing. And frankly, that is the best recommendation and show of appreciation that a client can give us is to come back and use us again, right? People don't do a lot of mortgages in their life. Most people will do one or two, right? You'll buy one house, maybe trade up one other time in life, and that's the extent of it. So, we've got clients today who are doing 10 and 12 transactions, a year with us. Some clients doing two or three a month. So, certainly for us, it builds a lot of loyalty, and having the time to make the calls, to focus on the client, to be an advisor to them. And using AI has played a role in that, right? So we have some other tools that do kind of market analysis for us. And so these were things that used to take hours for people to run comps. We've got an AI agent who does a desktop review of the appraisal and validates, the comps using SFR Analytics, which is another tool out there. And so, we overlaid an AI agent on top of that. And so that agent goes out, pulls comps, reviews the appraisal data that was extracted by Kalina. And then this agent analyzes that data against a public data set to confirm if the comps are acceptable or not. So certainly these agents and orchestrating them to work together is also part of leveraging and creating the most efficient workflows possible for our people, but still for us. And I guess I can say it, AI amplifies our ability to make judgment calls. It doesn't make the judgment calls
Yeah.
for us.
Yeah.
And that's really, the important thing for us is the control freak in me, I want to make the decision, right? I
That's
want the people making the decision.
that's amazing. It's you know, when this AI was happening, and still to this day, the pessimists are worrying about job losses and displacement. But the more I work in this industry, and the more optimistic I am about it, because what people are doing, they're focusing on the right things with this optimization available to them, and taking care of customers with the objection of, I'm not just thinking, oh, happy thoughts. As you know, at Kalina, we all think about, okay, what's the ROI? What's the value here? Um, the taking care of customers with a business, with the intention of loyalty, return, a return of customers, which is directly impacts the bottom lines, is the trend that people are focusing on with this additional time that they didn't have to do data entry. And I think that's a better world. I'd love better relationships between us than anything else. So it's encouraging to hear that over and over again. I know we are close to our time here. I wanted to ask you a couple of more questions, and one of them is, having gone through this journey, like from your experience, from what you're seeing as possible, you're very um, also engaged with different AI to AI solutions. Where do you see this trend going? Where do you see the industry going? And like, what are some of your predictions or hopes of the future?
Uh, that is interesting because it's a conversation that Mike and I have been having a bit here lately, right? What is possible is where our mind is, right? It's not what's next. It's more than that. It's what can we do now, right? So we have access to these tools. We have access to our data, public data, and now we're running models and comparing those data sets against each other. Um, And so for us, it is, the scale, and at a pace that, we could never do it before. So we're trying to figure out, um, what's next,
Yeah.
right?
Yeah.
But looking at it not as a tool or a piece of software, but looking at it as an operating system, right?
Right.
It is a way of doing business as opposed to a tool.
Yeah. This is a good segue to my last question, and that is, to peers of yourself who are thinking about, adopting AI in different parts of their business, or thinking about their business as an operating system, as you mentioned. What are some of the advice that you have for them, best practices for them to follow?
One, I would say, get over your fear, all right? Because I think that is the initial thing, that the barrier. Any operator-led business can do this, right? If you understand your operation, the barrier isn't technical. It really is deciding what your time is worth, right? How much value does my time have? And then, leveraging partners like Kalina, who bring us the technical expertise so that we can execute on what is possible today with AI. And so be purposeful, have a plan, uh, bring your problem statement, right? Because if you don't have a problem or, friction point that you're trying to solve, then why are you building anything, right? So, that's the best advice I can give any operator out there is one, try it. Don't be afraid. Look, we have tried several along this path, and have spent money on some tools that haven't panned out, right? That didn't work, and not all of them approach things the way Kalina did, in saying, "Hey, we'll give you a trial use case for 30 days and prove our value to you, right? Prove the ROI and show you, the multiples that we are going to provide you." Where a lot of the guys out there don't do that. So you buy their tool and then determine if it works or not. And so as part of that, several failures along the way too, and that's okay. This is an iterative process, right? It's ever changing, ever evolving. And I look at the Kalina agents that way too. We'll be constantly fine tuning and making changes as fraud continues to be prevalent in our industry. And as these fraud actors, as we call them, find new ways to perpetrate fraud, we'll have to continue to teach the agent to root that out and help us identify that in documents and things that is reviewing for us.
Well, that's great, Jeremiah. Thank you so much for your time. I learned so much in every one of these conversations. So thank you for taking the time to teach me about your process and our audience about your experience with AI and technology adoption across the org.
Perfect. I appreciate it.
Cheers. Yeah, thanks, Jeremiah. That was Jeremiah Garza from Longhorn Investments. If you, if you've been if you've been wondering if you have been wondering That was Jeremiah Garza from Longhorn Investments. If you've been wondering what good enough for production actually means in a regulated industry, Jeremiah put a number on it and designed his process around the tools that delivered. That's what this show is for, to share real solutions that are working today and how to think about deploying them. So join us next time as we keep going after the same question we always ask: what is actually working? If you got something out of this one, share it with someone who's still deciding whether their accuracy bar is realistic. And if you want to see what Kalina could do for you, head to kalina.com. I'm Marat Tramlu. Thanks for listening.
Nailed it.